So why did we get into this, into Bitcoin? Well, inflation is the rate you're bleeding. We have to stop the bleeding. We had a bunch of cash. We had a $500 million business growing 0% with 500 million in cash, earning 0% interest. And the value of the money is falling at 15 to 20% a year, which means shareholder value is falling, which means that, you know, if you had all your life savings and you sat there and you lost 15 to 20% a year for a decade, everybody in there, everybody knows I can't just save all my money in a bank account yielding 0% interest and expect to put my kids through college or retire on that. In a decade, your money would get cut in half 2 or 3 times in value, right? So what's the strategy? You got to stop the bleeding. Now, what is stopping the bleeding economically? It means convert your currency into property that the government cannot debase. So, you know, the Venezuelan government can print 1 million times more currency, but if you own a house, you've still got the house. They're not taking 1% of the house every week, right? So your question is, what property do you buy? Do I buy a building? Do I buy a house? Do I buy art? Do I buy gold? Do I buy commodities? Do I buy stocks? Do I buy ETFs? Do I buy crypto? Do I buy Bitcoin? What do I buy? Something. I got to buy something with my money. You know, they tell stories about hyperinflation in Zimbabwe, and, you know, management consultants are taking all their money and they're buying like a bicycle or buy soap or buy toilet paper. Buy, you know, the toilet paper will hold its value more than the currency will, because at least it's still something.
I heard that goat shit was worth more because it burns longer than the money that burns. They value the goat shit even higher.
You know, I had money in Argentina, and the currency was collapsing. You know, it was like 1 peso to the dollar, then 3 pesos to the dollar, then 20 pesos to the dollar, then 40 pesos to the dollar. Now it's like 190 pesos to the dollar on the black market. And my lawyers and finance guys came in my office. They said, well, we got all this money. We got $1 million. I said, well, can we wire it out of the country? I said, no. I said, can we buy gold with it and carry the gold through the airport? No. I said, okay, well, can you just go buy a yacht and sail it to the Caribbean? They looked at me like I was out of my mind. But, you know, like a yacht, I mean, a boat is also property.
Yeah, of course.
Okay, so now why Bitcoin? Well, if you put your money in a boat, the maintenance cost is 10%. The boat might sink. It's expensive. If I buy a house, I got to paint it. It might burn down. You know, there's leakage, there's property tax. It's expensive. It's expensive to maintain. If I buy gold, well, gold is losing 2% of its value a year because gold miners keep producing more gold. So in 30 years, your gold's worth half as much as it was, and then another half, then another half. So gold is gradually losing its value, but it's very hard to move around, and nobody wants to rent your gold. Okay, at least if you buy a building, someone might rent it. If you buy a car, someone might want to use it. You might want to charter a boat, but you can't charter your gold. That's why people like property, like buildings and houses. Like, I'm going to Airbnb a second house and I'm going to get some rental income. That's the positive, but the negative is I can't carry a house on my back when I leave the country. And if I have an Airbnb in Buenos Aires, I mean, only a small number of tourists want to use that. So I've got a house. Who will give me a loan against it? Only an Argentine bank. Who will want to rent the house? Only an Argentine tourist. And then who will want to buy the house? Only someone that wants to live in Argentina. Okay, so that's property, but it's highly expensive to maintain. It can be impaired, it can be taxed, and I can't sell it to a Russian billionaire. So what's the best property? Gold? No, gold was property in the 19th century. A house, land, that's property in the 20th century. Crypto asset, that's property in the 21st century. Bitcoin is the apex crypto asset, the apex property of the human race. Why? It's the most secure network. It's the strongest brand. Everybody in the world knows what it is. It's engineered. It's engineered to be the most energy efficient. You know, like Brazilian Jiu-Jitsu, it's all about energy efficiency. You're in a system with someone else, and the issue is, how can you bring all of your energy to bear and set it up so that they can't bring their energy to bear? And you're thinking about energy and leverage. Bitcoin is engineered to allow you to bring monetary energy and leverage it and to be most efficient. And so we bought Bitcoin because it was the dominant digital monetary network. And we swapped our cash, first 250 million into Bitcoin, and it went up. And then we did a Dutch auction where we offered to buy back the stock of our shareholders if they didn't like the idea, because maybe they wouldn't like it.
That's right.
Well, we had $60 million tendered, but we had $175 million that we had after the Dutch auction, and we bought Bitcoin with that, and it went up again. And then our stock went up. And then we issued a convertible debt, about $650 million of it, and we bought Bitcoin with that, and that went up. And then
Amazing.
our stock went up again, and so we kept buying Bitcoin, and we bought as I said, 3.16 billion, but we issued 2.2 billion in debt at about 1.5% blended interest rate. So we used our public company. It's what did I do for us? I mortgaged my company.
Right.
I mortgaged the future cash flows of the company in order to buy an asset that's going up in value.
You got me thinking about mortgaging my house right now.
Well, let's say you were sitting in Argentina and you ran a business. And I said to you, for us, I think that the peso is going to lose 95% of its value over the next 10 years. And you have a business and you're making like $1 million a year, and the peso is 1-to-1. If you keep working for pesos, you'll be making 1 million pesos, and that'll be worth 50,000.
Yeah.
It'll be worth 1/20th that much in 10 years. And so you're going to lose most of your money. But if you turn around and if you were to sell equity in the business and get paid 10 million, then you buy Bitcoin with it, or buy dollars with it. In 10 years, you'll have $10 million instead of 1 million or $500,000. And if you were to get debt, if you borrowed $1 million or $10 million against your business and you paid 5% interest, well, you pay the 5%, 500,000 pesos a year. You have $10 million. You buy dollars, and then 10 years from now, you're still paying 500,000 pesos a year, but your $10 million is worth $10 million, and the rest of the business is worth 500,000 pesos or something, right? It's collapsed to be worth 500,
But
very small amount.